Hello, everyone, and welcome to Giving You Keys to Home Ownership. I am your host, Kimberly Watson Johnson. Thank you for tuning in. Each week, we will bring you general information on the housing market here in Florida. We will not only cover the purchasing and selling of a home in general, but different aspects of the process, such as home inspections, down payment assistance programs, and the various costs that go into purchasing a home in Florida. We will also have guests on the program that will give us more understanding and details on such things as the different types of mortgages and the latest requirements for each of them, the various types of home inspections and what each includes, the appraisal process and the differences depending on the loan, the role of a title company and the part that they actually play in the process, discussion on credit and how it can affect your loan, and an explanation of the various types of insurances that are involved. My goal is to equip you with knowledge that will help you to navigate this ever-changing market, whether you are a buyer, a seller, or an investor. My guest today is Tim Guy with Open Mortgage. Tim, introduce yourself and tell the viewers what do you do.
Thank you, Kimberly. Hi, my name's Tim Guy. I'm the branch manager here for Open Mortgage, Spring Hill, Florida. I'm excited to be here, and you have some questions for me, I believe.
Yes, I do. Yes, I do. So today we're going to discuss, so you want to move to Florida. What do you need to do? So our questions are, question number one, can I buy a primary residence in Florida if my employment is out of state?
Yes, you can. And out of state, I think what you mean is your employment may be New York and you want to move to Florida.
Correct.
Your employer and your employment would have to be the type of employment that you can work mobile or travel.
Okay.
So it wouldn't matter where you lived. Your employer would have to verify it, and it's as simple as that.
Okay. Sounds good. Okay, next. What if I am self-employed in another state and want to purchase a primary residence here in Florida?
And self-employed is a little bit more difficult for the simple fact self-employed, so it would have to be, again, a type of self-employment where you're not stuck in a state where that's where you work.
Okay.
I think you used an example not too long ago about a truck driver.
Right. So if I was a truck driver and we did over the road, then I don't have to be married to a particular state.
Correct.
Because I drive, because my job takes me all over the place.
Correct.
Okay, and then you also have people that work from home because, of course, as we all know, with COVID, everybody became, their jobs actually came into the home place.
Correct.
And so they're working from home. They just got to be okay with the employer letting them.
Right, the
be able to do
employer,
that.
and then with the employment, the employer would have to verify it. With self-employed, we would use an accountant to verify that.
Okay, sounds good. Our next question is, how much would I need in funds to buy a primary residence in Florida? So tell us, how much money do we need? What do we need?
Well, depending on your purchase price and depending on what program you qualify for. I know
Okay.
you're going to run a program in the near future about programs and products.
Yes.
So I don't want to get too deep into the nuances of a program, but typically you're going to need 3 to 5% down
Okay.
your down payment, unless you're doing a VA loan, which allows 100%, or if you're doing some sort of a government product which offers 100% purchase.
Okay.
And then you're probably going to need anywhere from 4 to 4.5% for closing costs.
Okay. So closing costs, and you're saying down payment, closing costs. So your down payment is what?
Your down payment on the purchase price.
Okay, so
if your purchase price is $200,000,
Okay.
you would need 3 to 5%
Okay.
for the down payment on the loan.
Okay. So you have the down payment, then you said you have closing costs.
You have additional closing costs, which includes your prepaid, your taxes, the title transfer, the title work, underwriting fee, processing fee.
Okay.
All of that we can get really deep into discussing each line item.
Yeah.
but
That gives
that's
a
a general idea of what your costs are.
Okay, okay, got you, got you. Now, after purchasing a primary residence, how long do I have before I have to move into the property?
Well, the guidelines are they actually give you like 60 days
Okay.
before you have to move in.
Okay, 60 days. What if I can't make it in those 60 days?
You need to make it in 60 days from
Okay.
closing.
Okay, so 60 days from closing, I have to take occupancy.
You have to
Now,
move in.
how do they know? I mean, what do I have to do to show that I took occupancy?
Well, when you move to Florida, for example, you have 30 days to change your address information.
Okay,
Um,
okay,
The lender, there would have to be some situation where the lender found out. I don't know how they would find out,
okay,
but then they would just call your mortgage, which means
Okay.
you'd have to pay the mortgage if you didn't abide by a form that you signed saying you'd
got you.
move in.
You move in. And a lot of times what they do is they want to make sure you went down, changed your driver's license or got a state ID and claimed the home as your primary.
Correct.
Okay, gotcha, gotcha, gotcha. Now, what are the requirements for purchasing a second home?
Basically the same, but you would have to have what's called reserves, 3 to 6 months, depending on which program you qualify for or which program you're doing.
Okay.
Where did I lost where I was at?
We were talking about a second home, and we were kind of talking about that second home and the requirements for purchasing.
The reserves is what I was at.
Okay.
I got stuck on reserves. So it would be 3 to 6 months reserves. And what reserves are is the lenders would look at your mortgage payment and they would take 3 months of that or 6 months of that, depending on your strength and how you qualify. And that all derives from credit score, assets, income, all that.
Got it, got it, got it. Now, can I rent out that second home that I purchased? Can I rent it out, get my little cousin living in there to pay the mortgage?
Legally, you cannot rent out a second home. We would have to do that as an investment purchase.
Oh, okay. So you can't rent out that second home. Okay, then. So, can I buy an investment home in Florida then?
You sure can. There are a couple of options with an investment home, 15% down and 20% down. The 15% down, you would have what's called PMI. So we try to recommend the 20% down. It gets rid of that extra little payment in there.
Okay.
And there again, you would also have to have the reserves, depending on how you qualify. And that's why you really need to call me first. And you can reach me at 352-610-9406. That's 352-610-9406.
Sounds great. Now, do I need a lease on an investment home that I purchased? So if I purchase it, do I have to have a lease on it?
You do not have to have a lease.
Okay.
If we're trying to use the investment home as part of your qualifications,
Okay.
what we would do is we would order a rent schedule. And a rent schedule is something the appraiser would do. So when we order the appraisal, we would have the appraiser do the rent schedule. And it's similar to the appraisal. He would look in the area nearby, what other homes are getting as their rent.
Okay.
2-bedroom, 3-bedroom, 4-bedroom, and then he would give us a recommended amount. Now the cool part about that, or the uncool part is, we could take that number and use 75% of it as income for you to qualify.
Oh,
for
to
the
help
home.
qualify for the home.
So if you need the money monthly to make your loan stronger.
Okay. Good. Next, if I currently have a VA loan in New York, can I purchase a home using my VA eligibility?
We love doing VA loans. Thank you, veterans, for your service. The big thing about this is, yes, you can. A lot of people do not understand or realize that you can actually have 2 VA loans.
Okay.
VA, you have what's called an eligibility amount.
Okay.
And it's just a calculation. Now, with you having a current VA home and purchasing another one, we would have to do that calculation, and there may be some minimal amount of a down payment. And then the other highlight is VA doesn't have a minimum loan amount.
Okay. Okay. Okay, so no minimum loan amount. And also, okay, I heard you say something about like PMI or whatever. Now with a VA, do you have PMI?
PMI is not on a VA loan.
Okay.
That's another advantage veterans get.
Okay, great. What if I transferred to Florida from out of state? What documentation would I need? Like what paperwork are you going to need for me if I'm trying to transfer from out of state?
Okay, so if you're going to be transferring your employment for whatever employer that is, all we really would need is the general documentation that we would request anyway,
Okay.
and then a offer letter stating your pay, your start date, and your salary.
Okay. Give us what general documentation. You said general, so tell me what.
Well,
what's
typically we're going to ask for 2 months bank statements, 2 pay stubs, W-2s. One of the things when we run a pre-qualification, we run it through what's called desktop underwriting.
Okay.
And we let desktop underwriting tell us, okay, this is what we need to see based on the information you put in. We need to see this, and then the underwriter just verifies those 3 things and they put it together. So we know that at pre-approval. We know what documentation we need. So typically what happens is you call Kim, you're looking for a house, you call me, get pre-approved, I can tell you what I'll need.
Okay, they'll tell you what documentation you
Yep.
need. Okay, and once I give you all that documentation and we do all this, then I'm guaranteed this loan. Like, it's hands down, I got it.
We can't guarantee it until the underwriter signs off on it and
Okay.
says you're done.
Okay.
But trust me, if we tell you you're good, the only way you wouldn't be good, and I've had this happen, customer quit her job 2 weeks before closing.
Okay.
And there's nothing I can do. If you don't have a job, you have to keep your job. There's another show you're doing on things not to do.
We'll be there. We'll be there. Now, can I purchase a second home in Florida if I'm currently renting in another state?
Yeah, second home is it's the second home. You're planning on coming to Florida for 4, 5, 6 months.
Okay.
There's really no different requirements than buying a second home that we discussed earlier about. So
Okay. So just because you don't own a home,
doesn't matter.
okay,
Now,
it would still be considered
it
a
would
second
be-
home unless you're.
Unless you're going to be a primary.
Okay, got it. I understand that. Now, when do you recommend I start the pre-approval process, and how long is it good for? So once I go in here and I get you to pre-approve me, how long do I have before I have to find a place?
Well, there's really no deadline when you have to find a place.
Okay.
What happens is we do a pre-approval. You have 120 days. The credit report's good
Okay.
before we have to pull another credit report.
Okay.
So basically, if there's anything changing in your life, in your credit, then of course we would want to pull a new one anyway. But as far as getting started, I would recommend starting as soon as you think you want to move.
Okay.
It's important for you to understand what you're going to need, what you want to do, and it'll help you as the realtor when you do find a home for them. You can, with confidence, say, hey, look, I've got my customer pre-approved. They're ready to go. We're using Irene, local lender here, and Tim at Open Mortgage. That's going to get you the deal.
Okay, I understand. That's good. That's good. Now, what is analyzed in the pre-approval stage? What is it you're going to be looking at?
Primarily, we're going to be pulling your credit. We're going to look at your credit score and your credit history,
Okay.
your employment,
Okay.
and then your assets. All 3 phases affect your pre-approval,
Okay.
even with your down payment. There's situations where we've added, where the customer's, oh, I forgot about my Morgan Stanley, whatever the number may be, and it can actually improve the pre-qual
Okay.
based on the fact, oh, they've got, stable savings in the back. So, I mean, it's a wild market. It's a ever-changing underwriting guidelines, ever-changing industry. We see it every day. Something changes. I mean, we just got through the COVID in 2020. We had what I call overlays that
Okay.
the government added. A lot of those have gone away.
Okay.
Even some nuances have changed with FHA and VA where they're not looking at certain things that they used to look at before. But there again, we take pride in making sure we're up to date on all those type of items.
Okay.
And you're not blindsided, the customer's not blindsided, and
Yeah, I
we
hate
get
blindsides.
these,
Nope.
we get these deals done.
Okay. Now, do I have to be in town for a closing? Like, do I have to leave upstate and come down here to close on this home?
First of all, we would love to have you here at the closing table. However, you do not have to be at closing.
Okay.
We can have the title company, they'll do one or two things. They can do a mail away closing. And if you're going to do a mail away closing, you might want to lead a little bit more time, maybe 5 extra days for the FedEx back and forth. The other option is a mobile notary. And there are, all across the country, there are mobile notaries. They'll come to your home, they'll close your house right in your living room.
Okay. Sounds good. Sounds good. Another question I get is, what is considered a first-time home buyer? What is it require? I mean, how can you be considered a first-time home buyer?
Well, it's kind of funny you asked me that question because you would think first-time home buyer would be the very first home you bought.
Okay.
Well, that's not the case.
Oh.
Basically, what a first-time home buyer is if you have not had property ownership in your name for 3 years, you are considered a first-time home buyer. Now, in some counties and some states, there are credits on the transfers and the taxes and things like that, but that happens town to town, state to state.
Okay. Okay. All right. So long as I haven't owned anything in 3 years, and long as I've rented basically, or lived with somebody for 3 years.
If you've lived with someone or rented with someone for 3 years.
I haven't owned a home.
Now, keep in mind, that's not saying that we went through in 2008 a lot of foreclosures. And people have left the home, but the home actually never changed hands for 6, 7, 8 years.
Oh, okay.
So
yeah, I remember that.
Your name has to be off title for 3 years to be
Okay.
considered a first-time home buyer.
So let's make this really simple. Your name cannot be on a home anywhere for 3 years.
For 3 years.
Okay. Now.
Which is only 3 years.
Okay, good. Now, can any of the funds I get from my down payment, can it be a gift? Can someone give me the money?
Absolutely. Gift funds can be used for primary and second
Okay.
home purchases.
Okay.
The biggest factor is they have to come from a family member, and probably the biggest resistance that we get a lot of times is from grandfather, grandmother. I don't want my granddaughter to see my stuff. Why do you need my bank statement?
Yeah.
Well,
we get that a lot.
Unfortunately, with all the changes from 2008-9, with the gift funds, we have to source the money, and it has to be a 30-day
Okay.
source. So in other words, we have to see 30 days worth of that money being in an institutional banking system. In other words, it can't be cash from the barn or underneath the mattress that grandma gave me.
That they dug up in the backyard. You can't get them cans out the backyard.
And it's kind of frustrating because, I come from an area where a lot of people have cash. That's the way they live.
Yeah.
And you have to season what they call season the funds.
Okay.
So if you know you're going to give someone a gift, or if someone's going to give you a gift, just make sure those funds have been seasoned in the bank for 30 days.
Okay.
And understand that we're only verifying that money is there and it's not been laundered or all that stuff.
Okay, it hasn't gotten by illegal gain.
Exactly.
Okay, gotcha. Now, what is the typical turn time for to purchase a home? What is, the loan? What is the typical turn time?
From the day of contract, when you go to contract.
Okay.
Depending on, if it's a Friday or Saturday, then, you kind of got to skip until Monday. But
Okay.
typically we say 30 days.
Okay.
We have been able to, in quite a few situations, get stuff done. I think the last fast one I did was 11 days.
11? 11 days.
We got it approved in 11 days. It was an FHA loan, but the appraisal was already done.
Okay.
Because something happened with the previous purchaser, so that FHA appraisal stayed with the FHA case number with the property.
Oh.
So that was probably the only reason we got it done that quick. But in saying that, the way you get stuff done like that is providing documentation on a timely manner.
Okay.
You know, do the pre-qual, get the contract, submit your documents.
Okay. Sounds good. Sounds good. All right. Here's a good one. Why should we use open mortgage as opposed to my local bank in the state I live in? So why would someone want to, like use you guys instead of like Bank of America or Bank of whoever who's up there? Bank of whoever's, not Bank of America, just Bank of whoever.
Right, I understand. Well, I used to work for Bank of America, but I would say probably a few of the main points about using open mortgage. One, we are here, we are local, we work with Kim, we work with local title companies. We have over 35 years of experience. My wife Irene works with me, and she's just phenomenal. We get everything done. She's great to work with. There's the timing, the turn times, the closing. I can talk about certain lenders and banks and their turn times. Like I say, we're 30 days or less.
Okay.
And I never would not encourage you to shop.
Okay.
You're not going to get dinged on your credit report. A lot of lenders will tell you, don't pull another credit, it's going to hurt your credit.
Now, when you say shop, let the people know, what do you mean when you say shop?
Well, if you wanted to check with your local bank
Okay.
and see what they had to offer you, and then
Okay.
call us and see what we have to offer you.
Okay. Okay.
It's a win-win situation for you as the consumer to do that.
Okay.
We have a situation, a current loan right now, where the buyer called Irene 2 Saturdays ago or 2 Fridays ago and says, I just don't feel comfortable. I want to see what you can offer me. They offered me this, and our offer was better.
Okay.
And it wasn't that I made it better. It's just that whoever they were using.
Options.
And in this market, I'm telling you, this market is crazy right now. Lenders,
Yes.
everybody is having their rates changed. Every pricing in the back room, and I don't understand it all. I can just tell you that I've priced loans, and we win sometimes, and we lose once in a while.
Okay, once in a while. I like that one. Win sometimes, lose once in a while. Okay. Well, we're going to conclude today's show. If you are looking to move to Florida and want to know where to start, I want you to give me a call. Okay. It's Kimberly Watson Johnson, People's Trust. Nope, not People's Trust. Cut that part out. Kimberly Watson Johnson at 727-946-6949. Once again, that's Kimberly Johnson at 727-946-6949. And remember, for all your mortgage needs, see Guy before you buy. That's it for today's show. Join us next week when your topic will be, why should I get a home inspection? Thank you for watching Giving You Keys to Home Ownership. I'm Kimberly Watson Johnson. Have a wonderful day and goodbye.